What's up, everybody? My name is Ted Filson, and I'm here to tell you about the downfall of Ubisoft. As many of you know, I am not the first to cover this topic. Far from it, in fact. There is buttloads of videos out there covering their downfall, and specifically, their dramatic dip in stock price. However, as a certified finance bro, although not necessarily an expert on French gaming equities, I believe I can add some much needed color to the ongoing dialogue. So, that's what I'm here to do. And I'm going to do this in three chunks. The first chunk is Ubisoft. Who are they and why should we care? This is really just for the non gamers if you end up here. Then we're going to get into the current narrative around the company, what the journalists and the content creators are currently saying about Ubisoft, and what the sort of understood narrative is. And then finally, we will get into what is really going on, what people have been getting wrong, and showing you the numbers. So, first, who or what is a Ubisoft, and why should we care? Well, Ubisoft is a video game developer and publisher that got started all the way back in the late 80s making computer and console games. They didn't make much that you should care about until they released a game called Rayman in the mid 90s. But they were technically making games before that, so we'll give them credit. They are currently one of the biggest video game companies in the world, with multiple AAA releases a year and a pretty healthy catalog of franchises. As of today, some of their biggest franchises include things like Assassin's Creed, Far Cry, Watch Dogs, all things Tom Clancy, but mainly Rainbow Six, Just Dance, Trackmania, and even some Mario games. Now, first side note here, it may be fun to dump on some of Ubi's business decisions, but take note of some of these other games, like Rainbow Six and Trackmania and Just Dance, and even the Rabbids games, which is a Mario spinoff. They may not be quite as mainstream as Assassin's Creed, but these are healthy franchises and likely making substantial amounts of money for the company. And if you do not know these games, then just take my word for it. Ubisoft is one of the bigs in the video game industry, and they have been for the past couple of decades. Oh, and they're French, and while they are publicly traded, they are actually controlled by the Guillemot family. Which is, of course, a French word that I don't care to pronounce properly. So that's all you really need to know. Very large video game maker, they French, and they're Guillemots. Okay, so now let's get into the current story, or the narrative. If you've been following the industry lately, you have no doubt heard of the impending death of Ubisoft. It's all over the place, and people love to talk about it. As an example, if you are unaware, let's take a look at some video titles available on the topic after searching Ubisoft finance news. Here is two of the most watched vids on the topic, one from Asmongold and Legendary Drops, respectively. Ubisoft investors are done, and the complete and utter collapse of Ubisoft. Now, I have watched these videos, and many more from folks like Bellular, Ordinary Gamer, and lots of others. And before we get into all of the things that these vids get wrong, let's first say that generally, these are great vids. These channels are video game channels, and they are following the news and keeping people, including me, informed on the industry. And that's great. However, the reality is, it's clear none of these guys really have finance backgrounds, which, of course, is not an insult. I don't think any of them pretend to. And the media and news they are relaying to us is also not generally produced by people with any real understanding. So, if you watch any of these other videos, or similar ones, you will generally hear the same story. Ubisoft is trash, the games are not selling, and that is why Ubisoft is dying. Common secondary logic threads here are Ubisoft is over-franchising and over-monetizing its games, which makes them less fun, and of course, Ubisoft is over-wokatizing its games, which is making them less fun. And because of this, the games are not selling, and that is why Ubisoft is failing. This is a key point here for the reason I'm making this video. Revenue. So go ahead. Watch these videos. At the end of the day, 90% of the discussion here is about Ubisoft having a revenue problem. And a lot of this is both true and logical. And there is certainly evidence that both of these points, the woke mob fears and the overmonetizing of IP, are fairly relevant and part of the story. But it kind of misses the crux of the problem. And if you watch these vids or read these stories, you will also almost always hear about one specific data point to support this storyline: the stock price. Now, if you don't know already, Ubisoft's stock price has fallen like 80% over the past few years, which, if you are new to numbers, is sensationally catastrophic. No question about it. That is top notch bad news. However, if you're watching these vids and following the content, and you are not a certified finance goon, you might end up under the impression that this is the whole story. Ubisoft revenue is falling because their games are shittier now, and the fall in their stock price is also a perfect analog or evidence of that. Because that's basically what's being reported. So, to put a bow on the topic, that is the current narrative. Ubisoft sales are bad because games are bad, and so stock is bad. And that means Ubisoft is dead or dying. Okay, good. So, on to section 3. What is really going on? And what are these stories getting wrong? But before I get into this, I got a couple pit stops to make. First, let me touch on what some of these stories are getting at least half right. First off, the woke complaints. In a lot of the news surrounding Ubi, a lot of people and outlets point to Ubisoft's overly PC and watered down characters and storylines as part of the reason that their games are failing now. And there might be something there. Just as an example, I personally didn't play Star Wars Outlaws because it looked pretty weak. And obviously, that's not the only example. So already, we can give a half point to the current narrative. The desire to be PC may be hurting game quality. But in doing my research, I actually found some juicy little nuggets on the topic of political correctness that I've not heard anyone else mention. So, as my first good deed, allow me to share. Up on the screen, I'm showing you some snips of Ubisoft press releases. Okay, now a little additional context here is that Ubisoft had some Me Too issues starting around 2020, which incidentally is the same time they start having major financial issues. And everything about the Me Too stuff was kept hush hush, so no one really knows the full story yet, and court proceedings have actually just started. But in any event, no matter the crime or lack of a crime that was committed by Ubisoft, what we do know is that following this negative press, Ubisoft spent an enormous amount of time and money and attention units of the executive team on trying to avoid getting sued again. And when you read these things, you need to remember these are initiatives that are rolled out at high expense and come straight from top brass. This stuff is extremely time consuming and expensive. And by the way, they address this topic in almost every single press release they make post 2020, showing it is a topic constantly at the top of mind for the executive team. Okay, so let's see, what are they doing? They are hiring special consultants, creating new and administering and analyzing special surveys for their thousands of employees, hiring new executives that report directly to the CEO, no less, creating and hiring entirely new departments, implementing lots of compulsory trainings, and all sorts of different things. But I saved the best for last. They are actually bragging about creating a new content review committee. Now, this is two major points here. People should really, really not underestimate the cost and distraction of all of these sorts of things. All these initiatives and rollouts, all of them go through the executive team, and all of them cost an enormous amount of money. So keep this in mind as we go forward. This side of the story is pretty relevant to Ubisoft's woes for both of those reasons. But wait just a minute. What is that last bit? The creation of a content review committee. Oh, yeah. Let that little nugget simmer for a moment. The Guillemots literally created a whole new department, not led by game makers, but led by human resources to sit over top of the people who have already been making games successfully for 40 years and gave that committee power to influence the product. Lordy Lou. I mean, they said it, not me. It literally has the explicit goal of, quote, ensuring the group's content and product marketing is aligned with Ubisoft's values of respect and fairness. So, question. Did their games maybe lose a bit of their edginess? Did the games maybe get a bit watered down? Or maybe suddenly start scoring much higher on Big Brother's social welfare scorecard? Yeah, they literally created a committee to ensure that this happened, and they told us about it. So, there you have it. Point one for the current narrative. Political correctness is undoubtedly contributing to watered down gameplay and storylines, and secondarily is contributing to Ubi's woes via expense increases and certainly at sales shortfalls. And remember this timeline. This is from around 2019 to 2022. The next point the videos are certainly getting right is that Ubisoft's monetization strategies are both hurting customer satisfaction and therefore sales. But we won't spend too much time on this one because it's basically the same story. We all hate microtransactions and the games as a service and the loot boxes and all that trash. No one in the history of gaming has ever been pumped to see a cash store in their video games. We all know it sucks, but just like the prior point about political correctness, it's really only half a point, because while these annoyances do not directly translate to a loss of sales and therefore the downfall of Ubi, there is certainly evidence that their over-reliance on ex-McKinsey consultants to help them get kids to fiend for their new skins like little crackheads has created some financial issues. The best example of this is the X-Defiant debacle. And if you don't know, X-Defiant was a game that they developed for years and spent a few $100 million on creating. This was designed to be a service, meaning they give the game away for free, but you have to pay a monthly amount. Well, it was supposed to be a future game changer for the company, the future of Ubisoft. Well, it was abandoned only a few months back after hundreds of millions had been spent. So, similar story, but a little less on the nose. Okay, another quick note here. If some of this gamer jargon is over your head, the point we are making, which is really just the complaint about aggressive and manipulative monetization strategies, is that games used to be a straightforward transaction. You buy Rayman for $50, you play Rayman, whenever and however you want forever, and that's the end. Well, some MBA figured out a long time ago that if you give someone a game for free and then somehow convince them to give you a couple bucks every week, whether by buying power-ups or new socks or by introducing gambling mechanics, you can actually make them pay you way more than $50 for the game. Big companies love it. These principles make economic sense sometimes, but they are a lot harder to nail. So generally, without a little luck, companies that lean too hard into this sort of idea can suffer financially. They spend all this money making a game, then release it for free, hoping to get the long-term recurring revenue. But if it does not come, then they shut the game down and end up making way less money than they would have had they just sold the game normally. So again, a half point here for the existing narrative. These strategies are currently hurting the business, although it's not as clean cut as bad game equal no revenue equal stock down. Okay, final thing the current stories are getting right. And this is a bit of a shit show to parse through, and it honestly requires a whole other video. So, I'll make it quick. Basically, there's a lot of news about Ubisoft getting bought out or being taken over by Tencent or taken private by activist investors and all sorts of stuff. Well, when a publicly traded company like Ubisoft has a share price that is super low from a historical relative perspective, it's really common for people to sit around and hypothesize about whether they will get bought out. It just means the price is down. So, maybe someone will come and take them out, meaning buy the whole or some or large portion of the company. So generally, this news is accurate. Ubisoft is certainly in some trouble, and there is some buzz around the old water cooler about who might swoop in. But on the other hand, Tencent, one of the potential buyers, already owns 10% of the company, which is more than anyone else besides the Guillemots. And also, already owns a piece of every other major video game publisher out there. So it's not like this should be considered big news. I would also note that this sort of news doesn't really mean anything negative. The buzz exists because people think Ubisoft stock is undervalued. Think of it like a house. Big old mansion listed on Zillow for 100 grand. People are out there wondering if they should come in and take it off the market because it has value and it's underpriced, not because the house is shitty. Okay, back to section 3. What is actually going on? So, first off, let's dispel a key misunderstanding. Think back to what I've been talking about. Think back to what you've previously heard or read about Ubisoft's downfall. The games aren't selling, and that's why the stock price is falling. As one final example, take a look at PC Gamer's answer to the Ubisoft downfall question. And bear in mind, this is supposed to be an actual journalist explaining why the company stock is crashing. And as a quick aside, Ubisoft did not, and companies generally do not, publish sales data on the games in the list. They may give some tidbits here and there, like AC Shadows hits 1 million copies sold, but they just don't go around making these numbers public. Which is why this guy says vague things like, didn't make a splash. So, good. You see here, that's the current narrative. It's a sales problem. You heard it straight from the PC Gamer horse's mouth. Well, if you've made it this far, allow me to correct this for you. Take a look at this chart. The green line is Ubisoft's annual revenue over the past 20 years, and the pink line is Ubisoft's stock price over the last 20 years. Now, if you look closely, you might realize that these two lines do not do the same thing. Old Greenie over here, you might describe as, at worst, sorta stagnating. I mean, even with the dip from a high in 2021, can you really describe this as a catastrophic collapse in revenue? 2024's revenue is literally the 4th highest of the company's history and is actually higher than in 2019 when the stock price was still near an all-time high. So no, it's not even close. This is not a revenue collapse problem. Ubisoft sales may be stagnating a bit, but that is basically as harshly as it can be put. You can't say their revenue is falling, and you certainly cannot attribute their collapse in value or stock price to a meaningful degradation of sales. I mean, so that's it. We could just stop right there. Boom. Rumors dispelled. You are welcome. No, Ubisoft does not have a sales problem. Sales are near an all-time high, and the stock is in the dumpster. So, stock price and sales are very different, and apparently, at least according to this, hardly related. And Ubisoft is selling something, whatever it is, more or less better than they ever have. But it is, of course, not quite that simple. For the thinkers out there, you may already be wondering, well, what the hell is the problem then? What is it that investors hate so much? And I'll tell you. But first, one more tiny rest stop before we get into the gravy. If you are being honest with yourself, there is a very good chance you are also wondering, well, what in the flippin' heck is a stock price telling me? Because it certainly ain't sales. So great, let's play that game very quick, because I just can't help myself. And look, we're going to do this quick and dirty, but let's give it a try. So a stock is literally a tiny piece of the company, like a piece of ownership. And the stock price is the total value of the company divided by the number of shares or shares of stock. That makes sense, right? So if a total company is worth $100 and there's 100 shares, then the stock price is $1. And if that same company only has 2 shares, each share of stock is worth $50. Okay, so the total value of Ubisoft is, as of today, which is probably wrong whenever you're watching this video, 1.7 billion euros. That's how much you would have to pay today to just buy Ubisoft, the whole company. And that is just the share price multiplied by the number of shares. So, with regard to the question, what is a stock price telling you if not sales? try thinking of it like a simple pizza place. One question may be, how many pizzas are you selling? But another question is, how many Luigis do you need to cook a pizza? How much are you paying for the mushrooms that you put on the pizza? Do you sell things other than pizza? How much is your rent? Blah, blah, blah. And that's the whole point here. Ubisoft certainly ain't what it used to be, but it has much more to do with paying too much for shredded cheese and less to do with slinging tacos successfully. So, I hope that is more clear. So, as you should already know, the stock price is telling us an enormous amount of things, and in reality is telling us everything. Every single bit of information, from the Me Too accusations to the fact that Video Game Donkey made a video mocking one of their games, to the Steam data. All of this info is baked into a stock price in real time. So, on any given day, key movement up or down could be driven by anything. So, as a way of illustrating this, here on the screen you can see Ubisoft's stock price over the past 5 years. As you can see, it used to be up high and now it is very low. You will also see, if you look closely, that throughout this 5-year period, sometimes it just kind of moves up and down tiny amounts kind of randomly. And sometimes it spikes up and sometimes it spikes down. But on average, we can certainly see it has been heading down. Now, you will also see that there is some days where it goes down way more than usual and it doesn't come back up. This means that on that day something happened that convinced all of the investors simultaneously that Ubisoft's value definitely fell on that day. Pretty cute, huh? And you will also see that there is really quite a few dramatic dips on this chart that Ubisoft doesn't really recover from, meaning whatever happened on that day to make all of the investors push the stock price down, whatever the bad news was, it was never really mitigated. So, now we are getting somewhere. If we can understand what is driving these major drops, we can begin to understand what is Ubisoft's problem, if not sales. So, we are going to do just that. But, quick disclaimer here. There's about a jillion events that took place over the past 5 years that would have influenced UB stock price. We are not going to be explaining all of them. I'm just going to go to a handful of the very big days with 2 goals. One, increase people's understanding of the sort of things that does impact a stock price, and learn some of the big contributors to Ubisoft's, in particular, stock crash. So, onward. First up is February 10th, 2021, all the way to the left. With a little circle around it, you can see a pretty damn dramatic dip. Not just a little dip. If we zoom in on February of 2021, this is what we see. See the little red number up at the top left, negative 19.18, meaning a loss of $19. Now, if we go back a slide, the total drop over this 5-year period is about $84. You will also note that the price never rebounds. So we can say, sort of, mind you, it's really more complicated than this, but we can say that whatever happened on February 10th, 2021 explains a solid slice of this downward pie. Because the price fell and never recovered. So, clearly something major, massive drop. And they never recovered. Well, the company did, in fact, make an announcement on this day. And it is what is called a downgrade. A downgrade, or an earnings adjustment, or whatever you want to call it, is just when a company comes out and says, oh yeah, remember when we said we would sell a jillion tacos next year? Well, the year's almost over, and at this rate, we now think we will end the year with fill in the blank, some number that is different than a jillion. This is sometimes a big deal. Remember, the only thing investors know about Ubisoft is what Ubisoft tells them. And despite the fact that it may seem like a silly game to play, Ubisoft and every other company in the world generally tries really, really hard to guess and get the guidance that they give correct. So, up on the screen, we have the company's original guidance in blue, meaning what they told the investors they were going to do, which was given way back in March of 2020. And then in pink, the company's updated guidance that they published like a month before the end of the year. So we are actually ignoring the first non-IFRS operating income, although the range was tightened a bit in a negative way. The big kick in the face is the net bookings downgrade. And net bookings, by the way, is just their way of saying revenue or sales. So let's read it. Originally, they said net bookings of between 2.35 billion euros and 2.65 billion euros. Then, 9 months later, they come out with this guidance, quote, targets tightened for 2020-2021. Net bookings between 2.22 billion euros and 2.28 billion euros. And you gotta love the executive speak. They didn't say, sorry guys, we gotta lower our guess. They said simply, tightening targets. Classic. So if you do the math on the midpoint of the two ranges, which is a common move here for these investors, this is a $250 million downgrade, which the investors obviously hated. But we also have to remember, this new range is still an all-time high in revenue. So why are the investors so disappointed? Well, it's a pretty complex answer, but it just has to do with expectations. This is a 10% downgrade. That shows no matter how you spin it, the company is growing slower than they expected. So, while the company hasn't even begun to shrink or even really technically slow its growth much, the investors are already reacting negatively. This means that the original price on February 8th, before the press release, was assuming very strong long-term growth. And this little letdown was the first sign that the company's long-term growth will be slowing. And I'm emphasizing long-term growth because that's a big part of this. As an example, think back to the explosion of Zoom. Their stock did not triple in value in 1 year because their revenue tripled in 1 year. The stock price tripled in value because in that moment, it seemed like it might just grow forever, and no one could touch them. By the time Microsoft Teams and Slack got more mainstream, the hype for Zoom had died off. Yet all the while, their revenue actually kept on growing. In fact, here, at Zoom's peak in stock price, they only had revenue of $2.6 billion. They are now sitting at $4 billion in revenue and still growing. So what happened? Well, lots of things, but the main change was investors, after only a year or so, realized Zoom's long-term growth potential wasn't quite as crazy awesome as they thought it was. And I say all that to make the point clear. The first dip we see is very clearly the beginning of the downward spiral, and yet it all comes from a revenue downgrade, which communicated to investors not only is the executive team doing a bad job of understanding their own business, but also that Ubi, although still growing, might just not be quite as hype as they thought. Okay, let's keep going. Up next, May of 2021. This is the second big dip that's called out here. This is when the company actually comes out and says, okay, this is how much we made. And a few things are clear in these releases and in the discussions held during the earnings calls. By the way, earnings calls are just sort of like a town hall. They are technically open to the public and other investors, and the company gives a little presentation with prepared remarks and then does some Q&A. But they only give out pre-approved data and they brush off any detailed questions. Okay, so 2 things from this earnings press release. 1, Ubisoft just barely hit the absolute low end of their projected ranges, which is generally a bad thing. And 2, expenses grew by like $250 million, while underperforming on revenue, driven both by expansion of human resources and ESG offices and greater investment in this gamification and over-monetization strategies. And then 3, as a side note, debt jumped like $600 million from a bond issuance. So, following this dip and over the next 2 months, the company has already lost almost 40% of its value. Growing expenses, less predictability, lower growth expectations, and growing debt. And don't overlook the debt problem. Issuing a $600 million bond for a company with $2 billion in rev is a massive deal. Not always a bad thing, but definitely always something that increases risk. While we are here, why don't we take a look at their 348-page report, just to get the gist of how they are feeling. In this report, which is filled mostly with absolutely bizarre and confoundingly useless info, there is a one-pager called Financial Highlights. Great, this should be juicy. Tell us, Ubi, what are the highlights this year for one of the world's largest gaming companies? Break it down for us so we can understand. Well, the actual page is too big to fit on the screen, so I will just take the bullets and make them shorter, and I will add a translation column on the right. And I mean, I'm not even going to go through all of this, but look at this stuff. This is Ubisoft's best attempt at hyping up their financial, keyword financial, accomplishments over the past year. And it is literally mostly just DEI initiatives, plus 3 random non-video game schemes, and then 2 video game mentions. Honestly, it's mind-boggling. But again, a fantastic example of why their stock, as of May of 2021, is still enjoying a nice ride downhill, despite revenue still really not having a major problem. Because investors are smart. They don't like this stuff any more than you or I. And then finally, remember what guidance is when they make some guesses about what the next year will be. And by the way, what I'm about to show you and highlight is not a Ubisoft problem. This is how public equities work. But okay, you know they need to give some sort of guess about the future. And this annual report is when they do it. And remember, this is a 348-page report. So now, consider to yourself, what might that guidance look like for a company of this size? This is a financial report after all, and the next 12 months are very important. So, it must be somewhat substantial, right? Well, here it is. These are Ubisoft's Outlook commentary in their entirety, and highlighted in yellow is the revenue. That's it. 3 sentences, mostly vague nonsense, and really only 1 sentence with any real substance. Pretty silly, eh? Well, that is all they give these investors to go on in terms of analyzing and guessing about Ubisoft's next 12 months. Okay, good. Second example down. And this time, the case was just bad earnings, nothing to look forward to, growing expenses, and a massive chunk of debt to enjoy. So, on to the next one. Here is another big one, a really big one, in fact. Another maybe $20 slide over the course of a couple weeks. And the good news is, this one is pretty simple. Ubisoft takes out more debt, and they take it from Tencent, meaning Tencent loaned them the money. And that means another 500 more million to pay back and just loom over Ubisoft's head and make investors more nervous. Pretty straightforward. Investors are already getting skittish. Expenses are already growing too fast. The executive team is already missing targets and chasing shiny objects. And this is just like a stick in the eye. So, boom, stock price plummets, all based on this press release. And also note, Tencent is sort of a big baddie in the industry, and this just adds insult to industry. For one thing, they're one of the biggest investors across the industry, with investments in basically every single major video game publisher on Earth. But also, as a Chinese company, some investors may view them as state-sponsored and therefore not the best lender to borrow money from. May not sound like much, but given the negative momentum that's already in place, it's not hard to understand. Ubisoft has been saying, don't worry guys, don't worry, we're going to get the expenses under control. Then out of the blue, they come out and say, oh, by the way, we needed to borrow another $500 million the other day. Hope you don't mind. Okay, bye. So, That's the story of the next dip. So let's move on to the next one. Up next, we have January of 2023. This, like all of these events, is highly nuanced, and really, we could make a 15-minute video about each of these. This honestly looks like it should have been a giant one, and it is hard to tell in retrospect what the investors were really thinking. But honestly, I think the investors were already expecting it. So, like all of these examples, you can see that this isn't random movement, but the market clearly reacting dramatically to something on January 11th. And on January 11th, we have another downgrade press release. And they did us the favor of reminding us right here what their prior guidance was. And great gravy. It reads, Ubisoft is revising its Ubisoft is revising its full year targets with net bookings expected to be down more than 10% year on year versus a prior expectation of up more than 10%. Non-IFRS operating income reflecting lower net bookings, the postponement of Skull and Bones, and the depreciation of capitalized R&D for around 500 million is now expected to be negative 500 million versus positive 400 million previously. Do I need to explain that? Revenue downgrade by more than 20% in an operating income. By the way, maybe I do need to explain that. When they say non-IFRS operating income, you should just hear profit. That's all they mean. So, yeah, and a profit downgrade by almost $1 billion. Honestly, considering how redonkulous that is, I am almost surprised the dip wasn't worse. But honestly, it's probably because the stock was already down so low, and because investors were already, as we discussed, lowering their expectations anyway, and losing confidence that the executive team could guess properly about the future. Also, this very press release, the one that we just talked about them getting hammered for, the one in which they gave some terrible news about their future financial performance, they called this press release Ubisoft strengthens strategic focus on biggest brands and live services with a new set of measures cementing long term growth and value creation projects. Pretty classy, Ubisoft. We can always count on them to hide the ball. All right, Ubi, and tell us what are these sets of measures? First off, focus on live services. Nice. Classic Ubi. Second, okay, some depreciation. Don't really care about that. And then third, reduce costs by about 200 mil due to a quote unquote challenging market. Not a terrible idea, but it's going to take you 2 years, and it's too little too late. Your expenses have grown by much more than that. All right, well, at least they're trying. Then, finally, we have an easy one. This final dip I am highlighting began on the precise day of Star Wars Outlaws' release. Now, quite often, Wall Street does not have major movement on days of big releases. Why? Well, because they are not actually gamers with opinions on games. And they are also not foolish enough to believe that just because a game gets mocked on YouTube, that the game will sell poorly. The vocal internet mob has been wrong before, and this makes sense because sales data will certainly never be released, and the only intel they get comes in the form of press releases, and Ubisoft has an incentive to guess accurately how a game will perform. Because as we have seen, they will take a hit when they guess wrong. So, why would they change their models based on internet comment sections? Well, they generally wouldn't. But anyway, in this case, that literally looks like what has happened. I cannot find any other explanation for this dip. And in the financial models, these analysts were certainly plugging in ranges for the Star Wars Outlaws release because it was supposed to be massive. So it seems like some traders took a peek online, saw the reception, and backed out some of the rev, and ultimately pulled down their valuation. So that's certainly another point for the good guys. It doesn't always work that way, but that's what it looks like this time. So, there you have it. That should give everyone a pretty good understanding of what drives the stock price, why it moves, and, as far as Ubisoft is concerned, what has been driving their stock down. So, let's look at the picture holistically from a financial perspective. This graph shows 5 items over the past 5 years. We have sales, the light green line, which we all know what that means. OpEx, which just means operating expenses, is the light pink line. This is the money the company is spending. Dark pink is total debt. This is the money that they owe. And then dark green, the cash that they have on hand, meaning literally just money in the bank. And remember what we have already identified. One, expenses, with two big drivers: overinvestment in games as a service that isn't planning out, and the overinvestment in the HR side of the house, limiting creativity and distracting them from focusing on making games, their core competency. Then we have dwindling cash reserves and increasing debt. So let's take it year by year. 2019. Revenue and expenses are very close, meaning not much profit. But the stock is still healthy. And revenue is still growing. So really all good there. Plus, they have total debt of under 1.5 billion and over $1 billion in cash, which is a little tight, but if revenue keeps growing even modestly, there should be no real problems. Okay, 2020. Revenue grew a buttload, and expenses grew less than revenue. See how the distance between the light pink line and light green line increased in 2020, and the dark green line, which is cash, also spiked? Perfect. That all makes sense. Revenue grew more than expenses, meaning higher profits, and it contributed meaningfully to cash in the bank. These are all good things, and what do you know? The investors like it. The stock hits a new high. Okay, so 2021. This is when it gets ugly. So let's see. Revenue takes a dip. Not the end of the world, as we know. We also have expenses still staying generally flat. Also not ideal, but also not the end of the world. But what we do see is a pretty steep decline in cash and no progress on the debt paydown. So certainly, not a great year judging by this chart, but not quite the beginning of the end. Although remember, this is where they got hammered by some pretty significant earnings downgrades, and they spent all year talking about their new DEI initiatives, which I know some people out there think are for the best. But trust me, UB lost the script on this one. They were getting hammered by the press because of their mistakes, and they overreacted and are paying the price. So, anyway, you take the sort of meh financial year, couple it with their distractions and their earnings misses, and you have a pretty healthy shellacking of the price. Then, boom, we come to 2022. This is where the wheels fall off. So, right away, sales down again and worse than before. Okay, well, that's fine. Long dev cycles and what have you. Maybe, that's okay. As long as we play our cards right. Expenses? Through the roof. 700 flippin' mil increase in expenses, 50% on the second down year in a row. I say, how and why? Like, really? The stock is down, boyos. Sales are slowing. Our debt is too high. How are you going to go ahead and roll the dice and spend 700 mil more than last year? And what did you even release this year? Rainbow Six Extraction? That's what you bet it all on? Jeezy peasy. Okay, well, that was a bold strategy. Okay, how about the debt and cash position? Cash stayed level. Okay, that's good. But you took out another 400 million in debt. So no wonder. Okay, so it should be becoming more clear. And at this point, by the way, the stock is already around 30 bones, almost bottoming out. But let's do 2023. The chart should be more intuitive at this point. So, what do we see in 2023? Rev is higher than expenses. That's good. Also, Rev rebounded a bit. Not bad, not bad. But let's not celebrate yet. How about debt and cash? Cash is still falling. And debt is flat, which isn't terrible. But that debt needs to get paid down. Okay, so we see some improvement. But let's not pop the bubble yet. And what do the investors think? Well, looks like they generally agree. The stock stays almost flat from 2022 to 2023. Beautiful. This is all making sense. And you have done well to cut some of those expenses and react appropriately. So just don't lose control again. We have staved off utter collapse. We have right sized a little bit. If Ubisoft keeps this momentum going, they could pull right out of this. So, what happens in 2024? Now, mind you, this is their guidance. The 2024 results have not been published. So, this is what they are saying they are going to do. So, here we got what's the plan for the Frenchies? Gonna turn this shit around? No. Revenue's gonna dip again, but instead of cutting the expenses necessary, they keep the expenses more or less flat. Debt stays at an all-time high, and cash is now below $1 billion, around 750. And the investors have just had it. Still missing targets, still releasing the most Honda Accord games imaginable, still gambling with get rich quick schemes, and nothing is working, and they couldn't find a way to break a profit. Debt is out of control, and they are just about out of cash. And that brings us to today. Full year 2024 results are just ahead of us. And as you might guess, it doesn't look like the investors think much of this guidance. And honestly, Ubisoft will probably underperform anyway. So, ladies and gents, that is the story of the Ubisoft downfall. What really is going on and why the stock is so low right now. I hope you learned something in watching this video. And if you made it this far, thank you. I know it was long, but there's just so much to cover, and it honestly could have been an 8-hour mini-series, but figured my first foray into this world shouldn't be quite so aggressive. So, anyway, please, if you have questions or things you thought were boring that I should have skipped over or super interesting that I should have dug more into, let me know in the comments. Thanks again for watching.